What are basic cash management techniques? Basic cash management techniques are financial strategies many business owners employ to keep track of all the money involved in their businesses. This can include profits, expenditures, and debts. This does not just apply to money per se, but in knowing how to record and handle the finances to ensure the business is making profits. One of the simplest basic cash management techniques is expense tracking. As the term suggests, this technique helps a business owner monitor all the outgoing money. This usually applies when paying off loans, buying extra supplies, and distributing employee salaries. After all the expenses are subtracted from the business's gross income, then the remaining amount is usually the net income. Recording every cent that goes out will help the business determine its real profit, set aside finances for regular expenses, and save up on unnecessary costs. Aside from the expense tracking, cash management techniques should also involve tracking all accounts receivable. The accounts receivable refers to all the money coming into the business that can come from sales or returned investments. In some cases, customers and employees can even contribute to the money when they pay for the money they owed. The database should also note down the dates, such as when the money is borrowed and deadlines for payment. Keeping a record of incoming money helps regulate a positive cash flow by reminding any debtors that it is time to pay up. It also keeps the business operation on schedule by, for example, linking the time to purchase supplies to when the received money is at its peak. Withholding any expenses when incoming money is at its lowest is also involved. Another financial strategy is to begin a credit line, which is an amount a creditor can lend a business. This guarantees that once profits are not as strong, there is still some money to keep the business going. Credit line is one of the hardest cash management techniques, but it can be beneficial for a business provided the owner is a good debtor and pays his loan on time. If an entrepreneur pays regularly and promptly, he gains his creditors' trust and possibly increases his credit limit. In the future, he will also have an easier time setting up credit lines with other lenders since his credit scores are trustworthy. Cash management techniques, especially for businesses, generally revolve around having a bigger positive cash flow to ensure profit. If all financial transactions are accounted for, a business can operate smoother. Financial records can even include an inventory in order to have a better idea of how much the business is really worth.